The hedge resourceman here, it's November the 30th, 2022. Some news out today and some interesting volatility. Goliath released more assays from the 2022 Shorebet drilling campaign. A highlighted hole of 117 grams per ton AU equivalent over 1 meter within lower grade stuff, and confirming 97% hit rate of significant gold mineralization within its 1.6 square kilometer area. So here's some of the highlighted holes. 1 meter 117, Bonanza. Let's see here, 6 meters of 14 grams per ton or 2 meters of 41, really good. 5 meters at 5.37, including 3.12 meters of 8, and hole 2283 hit some significant 10 meters at 2.48, 5 meters of 4.19, 2 meters of 8.7, etc., etc. And here is the map and assays from this batch. I think those are from pad 17, Midwest, pad 10, pad 8, pad 3. And here is the expanded land position, obviously. Selected gold digger drill assay results. The key point, I would say, I mean, I think the stock is down, I don't know, 18% or something. Not 100% sure what that is about. If it's, you know, people were that disappointed with the assay results. Somebody said something about some CBR filing. And you know, who knows, profit taking, hot money, banking on results, and we're going into the quiet period. I mean, there's a bunch of stuff. Everybody has a main reason to sell or buy. Obviously, I think, I mean, I haven't done much in terms of calculations with these new hits, but I mean, the important thing to me is that, well, these are very large step-out holes. And this is the 2023 recommended pad locations. And I mean, they've hit wide, high-grade intercepts in, you know, several of these, at several of these pads. So, I mean, the important thing, I think, is there a robust gold and silver system here. I think that is the case. So again, I don't really know what the market is doing today or what this is about. I mean, I think it's down to, well, yeah, 77 million. There will be exercising some, there will be people exercising some warrants, including me, soon, so that will bring in some cash, obviously. I think they're obviously going to be quite aggressive for next year. So again, it's like, I don't know if it's the, you know, people thinking dilution is coming or whatever, which I'm not exactly sure how much money they can get from warrants. I know there's some warrants out at 1.30. Now we're obviously below that, so they won't they are not in the money right now. But I think there's a fair bit of warrants to exercise, which should bring in some cash. And again, at the end of the day, it's like, if we look a bit farther ahead, is this story intact? I would say it's very much intact, and we have no idea. I mean, pad G especially, I think this is where they hit the visible gold, and this might be a feeder, etc. So I mean, there's, I think, years of exploration potential left just in this picture, quite a few seasons. So I would expect this to become a multi-million ounce gold silver system, and in that case, I mean 77 million Canadian isn't obviously a lot. So I mean, what chance of success, or what percentage of an actual mine is priced in right now? I mean, undiluted, not much. Let's say, you know, I don't know what fully diluted comes out to, but let's say, you know, 100 million, 110 million or something. I think that's cheap. I mean, I certainly don't think the assays today is taking much away from the fact that I think this will be a multi-million ounce gold and silver system. And like always, I mean, I think what's easy to forget is that, again, these are very high, large step outs they're doing. I mean, they basically try to show the size of this in just 2 seasons. And obviously, I mean, if you look at the footprint, they will be stepping out quite a bit in 2023. That's the plan, at least. So most vein system, I don't know if you've seen many vein systems, but I mean, some of those chutes might be quite narrow. I mean, that you have to drill very close to some other good results in order to get more high grade results, because, you know, a chute might be, who knows, like 100 meters wide or whatever. I mean, you can see the scale bar here. So I mean, this is a swing for the fences type situation, the way they have drilled this. When if they drilled around more of the, you know, very high grade hits, I think they're going to hit more high grade, but that has not been the main focus this year. This year has been about showing how large this mineralized system is. So I think we can check that box, and just expecting that every single drill hole will have, you know, I don't know, high grade or bonanza or economic gold. I think that's you're missing. You're looking at the trees and missing the larger picture, in my opinion. So I've added a few shares today. I already have a big position in Goliath, and again, it's like I look at, okay, what is it priced at today, and what could this be worth in a year or two? And I see upside risk in that scenario. What the market does in the short term, I have absolutely no idea. I mean, I don't try to predict short-term volatility. I try to use it. So I mean, today, for example, who knows? It might go down more tomorrow or whatever. I have no idea about that. But it's like, so far, I mean, the trend has been up since I first bought shares in late 2020. And I still think this is a very nice picture. And in that case, I think this might end up looking quite cheap down the line. And that's what I focus on. Obviously, like, you know, you have a share price reaction like this, and everybody gets pissed off. But again, most people don't really beat the market anyway. I think beating the market short term is like extremely hard. Who knew that it would top here, for example, or that it would bottom here or top here or whatever. So I just, you know, I try to work with what the market gives me. And today we have a pretty big reaction down. So question is, okay, you get a 18% discount today. Even if, let's say, the holes were below expectations, which it looks like they were, is it cheap or expensive relative to this, to the actual, you know, whole case, not just one batch of drill assays? That is for each and one of us to decide, obviously. And there's certainly no guarantees in this sector. Well, I think the story is pretty much intact, long-term story. And again, it's like I have no idea if or when they're gonna raise money, what dilution, what terms, or yada yada yada. But I'm not after I want to see. I like the cases where, you know, aim for the stars and hit the moon, sort of speak. I mean, if the upside potential or fair value, long-term potential was like 150 million, I wouldn't bother with Goliath, obviously. But a multi-million ounce system that might have very, very cheap processing costs, that might, you know, if that were to happen, I would expect that to be worth several hundreds of millions of dollars, or possibly over $1 billion, you know, once they drilled more stuff. So yeah, that's, I mean, it's all about risk reward. And then we have Novo. Novo actually got crushed yesterday. The share price, I think it was down 20%. I actually added some shares, not a huge amount, because I think, I mean, it is a cashed up junior. I mean, I see it kind of like a cashed up grassroots exploration story nowadays, with a mill in the background. And it's like, if that is of course that's a liability right now, but also brings potential. So it's a juiced up grassroots exploration play, and it fell 20%. I mean, it's not totally unique. I mean, this is, we're soon into December, so that is like the final cutoff date for the tax loss selling. So, I mean, I saw no news out, or maybe it was 2 days ago. Yeah, Monday, I think. No news out then, dropped 20%. We're in tax loss selling season, so I just thought, hey, I mean, this is getting pretty, you know, this is getting pretty cheap. And then yesterday they came out with results. Becher area mineralization expands with more standard results. Novo's executive co-chairman and acting chief executive officer Mike Spreadborough said, "We are very pleased with the progress we have made on the drilling program so far and are looking forward to further results from the follow-up drilling in the first half of 2023, when drilling also commenced at Nanyeri North prospect. The success of the current drill program in the Becher area, combined with the previously reported results from Nanyeri North, reconfirmed the potential of the Ejina district to support a standalone operational hub." Okay, that wasn't the most interesting one. Okay, it's mostly progress. This one. Okay, these are the air core drill fences. I mean, it's pretty much soil sampling, as it was explained by Castellucca. So this is like soil sampling, which means that, I mean, this is not typical assay results, because they're not actually drilling into an ore body. They're drilling into the fragments, loose fragments of the, let's say, cover soil. Or cover rocks, or yeah, I guess that's how one could see it. So obviously these are anomalous results, and that's how the grave found Hemi, basically. Just, you know, air core drilling, wide spaced or large areas, and, you know, there was something that appears to have been shedding gold around Hemi, and you know, then they actually drilled into the bedrock, etc., and then later on they made the Hemi discovery, which is now, I think, the gray is worth over $1 billion, and I think that deposit is above 5 million ounces. I think it's actually closer to 10. And if we just look at the assets, let's say, Novo has. This is the September presentation. I think cash balance is, let's say, I would guess it's closer to 60 million right now. Around 20 million Canadian in stocks. So right now I would guess that the market cap is below the cash balance of Novo. And especially if you account for the around 20 million shares worth of equity, that to me makes Novo look extremely cheap. And of course, there's, if they do exploration, that costs money, and I don't know how much the, let's say, maintenance or winding down of the mill, etc., costs, and obviously their huge land position costs money as well. But I mean, to me, it looks like Novo should still have quite a bit of room to explore, and they're going to be very aggressive, and hopefully they'll make a discovery, etc. But obviously it's not this kind of volatility is, I mean, quite absurd, really, and there's a lot of piling on. I mean, when Novo went, let's say, I think this was a pop of, well, it wasn't a huge pop. It's like as soon as the stock starts to go up, or any stock really, I mean, it's quiet, but on down days like this, it's like everybody piles on, obviously, and it's like somebody here saying the best time to sell was yesterday, the next best today. Wish all the holders best, because this has been an absolute destruction of capital. And Whiskey also shared a email from Quinton. You can read this yourselves, where he, Quinton goes through all the misfortunes, let's say. I mean, I don't blame any management team or anything like that which tries to create value and is not fortunate. It's like, I think it was Ross Beatty who said, or I think it's the same, or was it Landins? No, but I think it was actually Ross Beatty, because he said, I don't blame management teams for drilling, duster holes, for example, because that's part of the game. What he gets upset with is if, a company doesn't, let's say, do what they're supposed to do, let's say a lifestyle company or whatever. So it's like, I don't regret anything really with, I mean, that might sound weird, but I don't regret, when I bought shares in Novo, I've always, let's say, I mean, that's because I saw the risk reward, I saw the case. So I mean, I was a part of a 10-bagger early on, when I started buying here. Obviously that wasn't, I mean, that was mostly luck that this would go on a huge tear, etc. And since then, I mean, if we wouldn't, the mood wouldn't be this bad if, everything went smoothly, obviously. Like they were able to put a world first or region first. They would actually be able to put a mine into production, which would be Beaton's Creek, or a conglomerate mine in Australia. That would be a first, basically a commercial. And that obviously coincided with COVID, lockdowns, and the bull market in base metals. So, I mean, the iron ore miners, we've read articles about how extreme the labor situation became. And furthermore, it's like, I think I've seen 12 juniors trying to go into production in the last 12 months and not being able to. And all of them, I think, I mean, that's including Novo, like 11 of them were conventional deposits, and they were unsuccessful to go into production. We've seen Pure Gold Mining, they basically went bankrupt. We saw Alexco, we saw, Monarch Gold. There's more, and I've seen some mines in Western Australia, gold mines, put their mines on care and maintenance, and they basically highlighted the cost inflation and labor cost inflation, etc. So this is just a piss poor time recently to try to get a mine into production, because obviously not many operations start off 100% smooth. That takes time to get it into actually up to commercial production and whatnot. And it's like Newfound Gold recently had some stellar results, and like he describes that, selling the Newfound shares was really disappointing and quite frankly embarrassing, and what that project has to deliver. So I mean, the Newfound Gold shares, I mean, they made another bonanza type discovery pretty much at the Keats West. Stock has jumped no, that looks like it's going to might turn into. I mean, I think the case changed a lot with this new discovery, because then it's just not the Keats main zone that has the wide bonanza potential, etc. And we don't own, Novo doesn't own any shares of Newfound Gold anymore. So I mean, that sucks. But imagine it's like where we would be with Novo if we didn't have those shares to sell, which allowed us to be debt free and have around 60 million in cash. So I mean, to summarize, I would say Novo is certainly not. I mean, there's almost no junior that has been able to go into production lately. But it's like in every particular case, it's always like. I mean, there were obviously mistakes done and all of that, but it's like it's not easy to run a junior and try to get an unconventional deposit into production. I mean, if everything worked out fine, we would be celebrating here and would be, I don't know, several percent, 100% higher than where the company is trading right now. But I don't judge, and that goes for any case, whatever. I don't judge any case based on the results, or not only the results, let's say, because I've made money on what I think are bad cases, in hindsight, like when I started out, and I've lost money in some really good cases, I think, because we never know. We only see the result and the risk reward. Let's say there was or even a 40% chance that Beaton's Creek would work. Maybe it was really cheap at 300%, a share price 300% higher than this. But we just saw what happened. And for that, it's the same with exploration. We have no idea what the true odds are. We can just know what, we can see what the price is for something. That is all we can see. That's all we know. All I know right now, for example, is that Novo has a market cap of 66 million. I think they have around 60 million in cash. And I think they have 20 million in equities. To me, that looks cheap. Very cheap. But that does not mean a guaranteed win or a guaranteed multi-bag or whatever. But obviously the odds are priced like Novo has no shot at creating any value, let's say. And I don't think that's the case. They have a very good exploration team, and these Betcher results seem encouraging. So who knows? I mean, fast forward 6 months. Maybe they made a discovery. Maybe they haven't made a discovery. I have no idea. I just know what I'm paying for it. And it's like, I mean, on the topic of like how crazy this market is and it's tax loss selling, etc. Mawson Gold, I've had this on my watch list for quite some time. Their subsidiary in Australia has kept on drilling or getting really good drill results. SXG drills 305.8 meters of 2.4 grams per ton AU equivalent. That's a whopper of a hole, obviously, and that included a bunch of higher grade sections. Like Stockholm here writes, and I'm assuming this is correct, that Mawson owns 93.5 million shares of SXG. That equals 72 million Canadian worth. Let's just assume that I think that is correct. 72 million in Canadian just from the value of the shares they own in SXG, which is on fire, as you can see. So basically they have shares worth 72 million in SXG. The market cap for all of Mawson is 47 million. So that's almost a 30 million. I mean, that's like, how much is that? Let's 30% discount to just the shares in Southern Cross Gold. I mean, if this becomes a discovery, I mean, this looks like I wouldn't mind owning Southern Cross, but it's like you can buy into Southern Cross at a big discount in Mawson, and you get everything Mawson has for free. I mean, they have a project in Finland. They actually have a deposit. Just put out a PA study. Doesn't look like the best project around. If that will ever be a mine, I have absolutely no idea. But it's like SXG's targets looks really substantial. So to me, this is just an example of a crazy market. Might be some tax loss selling, or whatever. Because there's somebody selling and buying, obviously. And it's the same with, this is one of the newest additions in my portfolio. It's like, hey, to me, this is a no-brainer. Even if you buy into the market always being right, in that case, one would say the market is right, valuing Southern Cross at $154 million Australian. So that means that Mawson should at least be worth 72 million just based on Southern Cross. If they would spin these shares out or something, that would be great. It's the same with, or not the same, but it's like, yeah, this market is kind of crazy. I think Magna Mining is, one of the best cases I've ever seen. And I wrote about that. I think it was superb around here. Then they made the Denison acquisition and updated the mineral resource estimate, the maiden resource. This had no business going down to 47. But somebody wanted out. Somebody has probably been locked up in this stock and hasn't been able to sell. So I was just, again, it's like, I think Magna Mining is absurdly undervalued right now. But Mr. Market said that, after it hit the high here of 62, it went down. I'm like, Jesus Christ. And now it's up. And I bought all the way down. Because I think the market is absolutely nuts. Sure, anything could happen. Nickel prices, which have been doing very well, might crash. But that's pretty much already priced in. Mitsui alone said the Shakespeare project was worth anywhere between 64 to 100 million alone at lower nickel prices. So one could say, let's say higher nickel prices, we might be pricing in Shakespeare right now. And the Green Hill mine, which belongs to the Denison project, that looks at least like twice as good as Shakespeare. So it's just crazy. It's like, I have no idea if, assuming the market doesn't know anything, and this just might be tax loss selling with Novo, for example. I think that the market is totally nuts with Mawson as well. At face value, there's a incredible discount to the value of their Southern Cross Gold shares. So how hard is this market really when you think about it? It's like right now there's no-brainers everywhere. And it's like Goliath. Is this fair that it's down 17.6% on today's news, etc.? I can't answer that, but it's like, so far I know what my results are. So when I, obviously on average, I have a pretty good idea what the long-term risk reward is. Because short-term, I have absolutely no idea where anything goes. I just look at, again, it's like in the case of Goliath, what might this be worth? And, obviously this should produce a lot of news releases, and we'll have, maybe a financing and maybe who knows in between. But it's like, yeah, even with financing, yada yada, what do I think these holes might show? And give it, let's say, look a year forward, for example. Do I think this will look expensive or cheap? If I think it's gonna look cheap, that's good risk reward to me. And there's been other news. Dolly Varden has hit some good stuff. Eloro hits even more, also pretty good tin numbers. I mean, this just keeps on growing. Newfound Gold's intercept 42.6 grams per ton over 32 meters at Keats West. Just an incredible. Cabral has also, I actually bought some more Cabral. That's been slammed. You can see, I mean, it's kind of the same look like Novo has. I mean, it's been absolutely slaughtered. Right at close to the end of the tax loss selling season. So I have no idea. You know, I don't expect anything. I mean, what we already know about Cabral, is this a lot or not? I mean, is this overvalued? I don't think so. But heavy volume closing into tax loss selling after, you know, a 2-year bear market, odds are that this is tax loss selling. Because I can't even come up with a, well, not off the top of my head. It's like, okay, what kind of coming news we haven't heard about would bring the value of all of Cabral's assets down to, you know, to make this look expensive, for example. I just can't see it. They closed the first tranche of private placement. I think that was actually done at like, 20 cents. So you immediately right now have, you know, a fat discount to where the placement. I should actually probably buy some more Cabral now that I think about it. But this is the stuff I think we should look at, because again, it's like in this sector, when cheap is, you know, cheap already, going into tax loss selling, some stuff can get absurdly cheap. Again, it's like Mawson, does that have any business trading, you know, let's say 30-40% below what their equity holding in SXG is worth? I don't think so. Should Novo be trading at below their cash balance plus equity holdings? I don't think so. So I mean, there's a common theme here. There's like, you see some absurd stuff, and obviously historically tax loss selling after a long downtrend is where you get the absolute best buys, because like, who knows? I mean, it's some pretty good volume today, for example. This might simply be someone with a fat position who doesn't care about where the price is. I mean, the whole point is, hey, I'll get a tax write-off. So I mean, then you don't really care what the valuation is. You're let's say done with the position, or you want to take a big loss because, I mean, you're gonna strike that versus capital gains anywhere anyway. So in that case, maybe Cabral should be already 200% higher. It's like, I have no idea. It's just, you're going to see some incredible stuff at these tax loss selling seasons. And like always, I mean, people get scared to death because sentiment is already bad. Share price has been going down. So it's like the Mr. Market is voting and saying, suggesting that value has just kept decreasing for, let's say, almost 2 years. And then you have a fat sell-off when everybody's already on pins and needles and hair on fire, etc. So then you start to think like, hey, you know, the market knows something. But it's like, yeah, but think about where we are. I mean, this is not the only absurd thing that we see in the markets right now. So it's like, does the market know that every junior that gets sold hard in tax loss selling season has some, you know, let's say bad news coming out shortly? Or is this just how the tax loss selling season work? I would bet on the latter. And of course, I mean, you don't have to go all in every store that's down a lot. It's like, hey, maybe if this is some artificial selling pressure, they make some new discoveries, we go into a bull. Where might Cabral be trading? Okay, maybe, you know, there's a shot at a multi-bagger from this valuation. You don't need every one of those to work out. So, and again, that's, you know, value shuffling, let's say. Let's say this is absolute bullshit and you own some stock that is actually up. I mean, some juniors are up 40, 50 to 80 or even 100% from the, you know, July lows, for example. So if I sell a bit of that, which has not seen this kind of tax loss selling, and I buy this, maybe I created some future gains. just, not predicting anything, just, letting the market do what the market does. And then I just, react to the volatility in the prices that are given to me. Because if nothing changed, I mean, obviously Cabral probably didn't fell 11% in value today. But price went down 11%. So who knows? Maybe that's an opportunity. It's like, yeah, I mean, I buying 2-year lows going into tax loss selling season, I think that might not be a bad idea on the whole. I mean, if you look historically, I mean, anytime you buy a sector at crash levels, that tends to work out pretty well in the next months or years, for example. Yeah, just some thoughts on some companies, and not investing advice. I own shares of, I think, all companies mentioned. Many are banner sponsors as well, so consider me biased, and always do your own due diligence, make up your own mind, etc. I mean, if you don't know why you would buy a stock, it's no point in buying it, pretty much. And again, it's like there are some, you can buy a lot more de-risked juniors than the ones I've gone through. It's just that I like to sprinkle in some, some companies that might have crashed way too much or way too low. And maybe some of them will do very well within 2 years. And, yeah, that's simple as that. It's like I can't predict the future. I only know what I pay for something. And then I try to, sort of guesstimate what is it worth today? What might it be worth in a year or two? And if I think that's higher than where it is trading, maybe there's an opportunity there. But it's like you can't take everything personally, what the market does on any given day. Otherwise, it's like if I took Mr. Market as gospel, I mean, I wouldn't beat the market, obviously, because you think that every run up and every crash would be 100% correct, and you would get no information from that. No, I'm trying to use the run ups and the crashes and look at, hey, I don't agree with Mr. Market right now, so I think it's being stupid one way or the other, and then I bet some money, and on average that has worked out well, meaning that, hey, typically that I've been able to buy stuff that shouldn't be as cheap as trading. I'm very bad at taking profits, for example. Yeah, long rant as usual. And again, it's like there are no guarantees. It's just that we know, well, the sector isn't even close to being overvalued. I mean, this is a joke still. Even though some juniors some are up actually 50 to 80% and might not have seen much in terms of selling pressure. Others are at crash lows going into the end of this tax loss selling season, and some I think are mostly driven by somebody who wants to take a tax write-off. That's my 2 cents, and try to stay rational. And again, if there was ever a time you shouldn't put 100% faith in what Mr. Market does or its ability to price things efficiently, that would be after a 2-year downtrend going into tax loss selling. That's my belief, at least. Thanks for listening. Bye.